Welcome to today's What Will Move the Market show. I'm your host Prem. It's Wednesday, January 7th, 2026, and here's everything you need to know as the markets open for today. Let's kick off with Wall Street's overnight recap. Yesterday, Tuesday, January 6th, was a stellar day for US equities as investors brushed off geopolitical tensions and looked ahead to a packed week of economic data. The S&P 500 achieved a fresh all-time record, closing at 6,944.82, up 0.62%. The Dow Jones made history as well, crossing the 50,000 mark for the first time ever, closing at 49,462.08, up 0.99%. The Nasdaq Composite also participated in the rally, climbing 0.62%. The big movers on the upside included semiconductor and artificial intelligence-linked names. Nvidia surged, Intel rallied, and Amazon, a key member of the Magnificent Seven, jumped over 3%. Data storage names like SanDisk and Western Digital also outperformed. Healthcare and technology sectors led the advance across all 11 S&P sectors. Now turning to our Indian ADRs overnight. Infosys traded at $18.10, up 2.38%, a solid overnight mover. HDFC Bank dipped slightly to $33.43, down 2.17% in overseas trading. ICICI Bank showed strength at $30.87, up 2.63%, the day's best performer among Indian ADRs. Reliance Industries GDR slid to $67.4, declining 4.13%. So mixed action in Indian paper with most names under pressure, despite Wall Street strength, signaling caution ahead of the domestic open. Shifting to Asian markets this morning, and here's where we're seeing some cracks in the optimism. Japan's Nikkei 225 opened with a more measured gain of 0.55%, suggesting the euphoria from the previous session is cooling slightly. More concerning, Hong Kong's Hang Seng has opened slightly negative and is now down 15 points in early trading, a significant reversal from yesterday's strong close. Mainland China's Shanghai Composite is also showing weakness in early moves. This Asian softness is a yellow flag for sentiment. And here's the critical indicator. GIFT Nifty is telling us exactly what Indian investors are thinking right now. GIFT Nifty has opened down 72 points, representing a 0.27% decline from yesterday's close. This negative undertone from GIFT Nifty, combined with weakness in the Hang Seng and more muted gains in the Nikkei, suggests the Indian market will likely open on a cautious note. We're seeing profit-taking momentum after yesterday's US strength, combined with lingering concerns about foreign fund outflows and global growth uncertainties. On the global news front, precious metals continue to dominate sentiment. Gold surged to $4,468 per ounce on Tuesday, up 0.5%, extending a record run. Silver has been even more dramatic. Prices exploded past $80 an ounce for the first time ever, up 2.28%. This precious metals rally is being driven by expectations of Federal Reserve rate cuts, dollar weakness, and persistent safe haven demand. However, the negative open in Asian markets this morning suggests investors are taking chips off the table after yesterday's strong rally. Crude oil remains under pressure, trading near $56 per barrel for WTI, as concerns over global growth weigh on energy demand. This softer crude environment provides some inflation cushion, but it also signals economic caution. Domestically, Indian markets face intensifying headwinds heading into today. Foreign portfolio investors have been relentless sellers, offloading approximately 7,600 crore in just the first two trading sessions of 2026 alone, continuing a devastating selling streak that saw record outflows of 1,53,000 crore during calendar 2025. The negative GIFT Nifty open this morning tells us domestic investors are bracing for more selling pressure. This is a day to be selective and cautious. However, analysts remind us that India's strong GDP growth trajectory, improving corporate earnings outlook, and attractive macro fundamentals should eventually attract overseas capital back, so aggressive dips may offer opportunities for patient buyers. On the technical front for the Nifty 50, today's weakness puts focus squarely on the 26,100 support level in the immediate term, with a stronger support zone at 26,000 mark. Any breakdown below 26,000 would be concerning and could trigger further selling toward 25,900. Resistance is now pegged at 26,300, which may be tested only if sentiment stabilizes. For Bank Nifty, support is at 59,800, with resistance between 60,000 and 60,300. The negative gift Nifty opening combined with Hang Seng weakness suggests we could see initial selling pressure in the first hour of trade. On the commodity front, gold at $4,468 and silver at $80 per ounce remain elevated, though the Asian market weakness this morning suggests some profit-taking may occur in precious metals as well. Crude oil's continued softness near $56 supports the inflation narrative, but underscores growth concerns. Monitor these commodity moves closely as they signal safe haven rotation rather than bullish economic optimism. Here's your key tactical insight for the day. We're transitioning from yesterday's all-clear momentum into a more cautious consolidation phase, and GIFT Nifty is your first warning sign. The Hang Seng weakness is particularly important. It often precedes moves in Indian equities. Today's playbook should be defensive and tactical rather than aggressive. Set your stops carefully because the 26,000 mark is not a guarantee of support in a broad risk-off day. Wait for any bounce toward 26,200 to 26,300 to initiate fresh shorts or protective hedges. For long-only investors, sit on the sidelines and let the selling pressure ease before adding. Banks may hold up better than IT, so if you're forced to be in the market, rotate toward PSU banks rather than chasing tech strength. Most importantly, avoid averaging down into weakness today. FII selling tends to be indiscriminate when it starts, so respect the downside risk. Cash is a position today, and patience will be rewarded once this selling pressure exhausts itself. Stay tuned for the evening wrap, and send in your questions to our team. Subscribe to this podcast to hear US every day, because markets move fast, and your morning briefing is your competitive edge. This is Prem, signing off. Trade safe, and let's regroup this evening with the day's wrap.